Welcome back, navigators. In today's video, we will emphasize the importance of staying calm and disciplined during turbulent times by not departing from our initial plan to navigate market volatility. Thus, if you have ever found yourself anxious during a market downturn, say the COVID-19 one, uncertain of what to do with your investments, stay with me. It's a common feeling the market is a tempestuous beast, twisting and turning with the winds of global events. It can leave even the most experienced investors feeling adrift in a sea of uncertainty. You may wonder, how can you protect your hard-earned investments when the market seems to be against you? Fear not, for there are strategies that can help you protect your investments during these challenging times. Let's take a trip down memory lane to the 2008 financial crisis. It was a time of great turmoil, a period marked by the collapse of large financial institutions, the bursting of the US housing bubble, and a global recession. Investments, both big and small, were hit hard, with many losing a significant portion, if not all, of their value. But amidst the chaos, there were those who managed to weather the storm. How, you ask? Well, they did so by diversifying their portfolio and investing in safe haven assets. By spreading their investments across a variety of asset classes, these savvy investors were able to mitigate the risk of any one investment failing. The 2008 financial crisis served as a brutal reminder of the inherent risks involved in investing. But it also highlighted the importance of diversification, of wise asset allocation, and the role of safe haven assets in protecting one's investments. As you can see, even in the face of a major financial crisis, there are ways to safeguard your investments. The key lies in understanding the market, making informed decisions, and above all, remaining calm and disciplined during turbulent times. Fast forward to the recent COVID-19 pandemic that shook the world's economies. This public health crisis took us all by surprise, causing ripples of uncertainty across the globe. The world's markets were not immune to this turmoil, as we saw significant downturns almost overnight. During this time, many investors were understandably concerned. Some reacted hastily, panic selling their assets in an attempt to mitigate losses. However, this knee-jerk reaction often led to regret when the markets began to rebound within weeks. On the other hand, we had those who embraced a different approach. These individuals remained calm, understanding that market volatility is a part of the investment journey. They focused on the long-term picture, knowing that the markets have historically recovered from downturns, and that also historically such periods do occur at certain intervals. Nothing new, nothing different. They protected their investments by not selling out of fear, but rather holding on to their assets and even seizing the opportunity to buy more at lower prices. Some even diversified their portfolios, spreading their investments across different asset classes to mitigate risk. Based on your risk profile, consider all available major asset classes and decide what percentage to allocate to each. Stocks and ETFs, bonds, real estate, and even commodities. For instance, you can choose gold ETFs or gold mining companies. Research the asset allocation of people such as Ray Dalio or Tony Robbins to protect yourself from melting markets. This approach, of course, requires discipline and patience. It's not always easy to stay calm when the market is in turmoil. But by keeping their eyes on the long-term horizon, these investors were able to weather the storm. Again, we see that even during unprecedented times, it is possible to protect your investments with the right strategies. So, what have we learned from these real-world case studies? In the face of the financial storm, it's our calm and disciplined response that ultimately charts the course. The market, with its unpredictable seas, can sometimes toss our investments around. But if we hold our nerve, keep a steady hand on the helm, we can navigate through the roughest of waters. The tale of the 2008 financial crisis and the COVID-19 pandemic underscores the importance of diversification, of proper asset allocation strategies, and of maintaining a longer-term perspective for your investments. Spreading investments across different asset classes helps to mitigate risk. Safe haven assets, our lifeboats in a storm, are also important and can offer a protective buffer. Gold, government bonds, these are the anchors that can hold firm when the market tide turns. They may not always promise high returns, but they provide a valuable safety net when the sea gets choppy. Perhaps the most essential lesson, however, is to adopt a long-term perspective. Like seasoned sailors, we must understand that storms are a part of the journey. They may slow us down, but they do not define our voyage. We need to focus on the distant horizon, on the long-term goals, and not be swayed by the temporary turbulence. Remember, while market downturns can be scary, they also present opportunities, and they will happen again. With the right strategies, you can protect your investments and come out stronger on the other side. That's all for today. Until next time, take good care of your finances, navigators. And don't forget to subscribe and share if you found any value.